Hey guys, Rod Moser. Just wanted to kind of get some of the stuff off my chest today, so I hope this is valuable to you as well. But there was an article that I was reading on Inland News today, and I want to just pull it up and share a little bit of that article with you. It talked about a company that is a competitor of ours in the real estate industry called Redfin. A lot of you may have heard about Redfin. Here's the article. In Inman News today, it says Redfin beats expectations with over $124 million in revenue for quarter four, 2018. Now, that in and of itself looks awesome, right? I mean, gosh, $124 million in revenue, that's phenomenal for a company. But there is something that is hidden down in the fine print of the article that I also wanted to share with you, and I think is just as important. It goes on to say that they beat analysts' expectations Thursday when it reported that it had earned $124.1 million in revenue during the fourth quarter. These earnings represent an increase of 30% compared to fourth quarter of 2017. The company also revealed Redfin also saw a net loss in the final 3 months of 2018 of $12.2 million compared to $1.8 million during the same period in 2017. So basically 2017, a year earlier, they lost $1.8 million, and in 2018, they lost $12.2 million. Now, this brought up a couple of questions for me, right? The first question that I had was, has Redfin ever been profitable? So I did a Google, is Redfin profitable? And here's what it said. Redfin has never been profitable. It has accumulated losses of $613.3 million. Now, this was back in June of 2017, before all the losses of this year. So even the last quarter, would bring this number to $625 million. Add the $2 million they lost in the fourth quarter of last year, and now where it's, anyways, you can see that there's a problem. So then I said, well, gosh, when was Redfin founded? And I found out that it was a company that was founded in 2004, and the company has never been profitable. So we're 15 years in, and we have no profit. Then I know that Redfin is publicly traded, so I said, when did Redfin go public? Well, it went public in July of 2017. Well, I was like, gosh, how much, what is the value of Redfin stock today? And it's almost $20 a share, and it's gone up $1.59 a share based on the new information that came out, $124 million in revenue. And I'm like, oh my gosh, this is fascinating to me, right? We have a company that has never been profitable, has been in existence for over 15 years. They created an initial public offering and are now publicly traded on the stock market to bring in a whole bunch more money from apparently people, and look, I recognize this might offend some people, but I don't know about you, but when I look at a company to invest in, one of the first things that I'm going to look at is what is the profitability of that company. And when I find a company that's been in existence for 15 years and they've never been profitable and have posted losses of $615 million, would I want to invest in that company? So then I was like, oh my gosh, let me just look and see, is this common? Are people investing in companies that cannot show a profit? And there was an article that came out in CNBC. I just Googled no profit, no problem. Investors keep snapping up loss-making companies. So this was an interesting stat. 76% of the companies that were listed were unprofitable in the year before their initial public offering. 76% of the companies that went public didn't post a profit in the year before. They're businesses that are going and looking for investor money to be able to run a business that apparently doesn't make any money. So then I was like, gosh, that's fascinating to me. Let me give you some companies that people are investing in today that are not profitable. How about this one? You may have heard of. It's Tesla. Tesla has never posted a profit. Tesla is not profitable. How about Spotify? Spotify, not profitable. Here's one that kind of surprised me. Uber. The big disruptor that everybody touts, that's this new company that's amazing, has never made a profit. They're not profitable. In fact, they had $4.5 billion in losses last year, according to this article. Now, this article was written in 2018, August 29th of 2018. So we're talking about 2017, and maybe something's changed. But let me ask you this. What do you really value, right? What are you going to invest in? Now, as a person, Gary Vaynerchuk came out this week and was talking about how home ownership should not be the American dream anymore. What a terrible idea that is. And I can understand it. Where he's at, New York City, it actually costs more money to own a home in New York City than it does to rent because of the high tax rates or whatever. Same thing with California. But outside of those two areas, it's actually cheaper to own a home than it is to rent. There's all kinds of different things. Where are you going to invest your money? And are we valuing growth over profit? So as a business coach, coaching hundreds of people, one of the questions that I always ask them is, well, when we go to these events, right? We go to these events all over the place, real estate events, there are local events, there's corporation events, coaching events. And at the events, they always ask the real estate agents, they usually bring up some agents that are very successful. And they always ask them the same question, which is this: how many houses did you sell? What was the volume of the homes that you sold? And there's these really, really, really big numbers. What I think the question should be is, how much did you get to keep? Did you create a business that is based on creating value for the clients that you serve and turning a profit? Or are we doing this just to get our name up in lights? Are we doing this to be able to say, hey, I sold a lot of houses? I get it. There's a lot of people coming in, and I guess they're willing to do this for free. As I call a few people, I've heard, tactics like this, like, hey, I will list your home for free if you'll use me to buy your home. I will pay you $500 if I can't sell your home in 30 days. Let me just ask you this, right? All of these people that are coming in and offering to do this for free are at a huge discount. If the only thing they have to offer you is cheaper, is that the person that you want to handle one of your largest financial transactions of your life? Is that the person that you want to bring in to negotiate on your behalf, somebody who's willing to give up money to be able to make it happen? Or do you want to hire somebody who has figured out how to create value for his clients? A discounted commission is awesome, but if they sell your house at a discount, is that really a good thing? The way that Redfin talks about, they're expecting hopefully a profit by 2021. So in their 17th to 18th year of existence, they're hoping to be able to turn a profit. And they said that they were hoping to be able to turn a profit by using an iBuyer program. And what an iBuyer program is basically we'll come in and give you a cash offer for your property. There are a lot of them out there: Open Doors, Knox, Zillows, Redfins. They're all creating this program, and they will come in and they'll give you 70, 80, maybe even 85 cents on the dollar for your house. And they'll eliminate the pain of having to have strangers come through your house and not knowing when your home is going to close and all of that. They're going to bring that in. Well, if somebody comes in and they offer to sell your house, but you end up walking away with less money, did you really win? What I would say is not necessarily. If I can come in and regardless of what you pay me, if when you leave the title company, you walk away with a bigger check, isn't that what you really want? Wouldn't that be the most important thing to you? So when you're looking at who to hire, are you going to hire the person that charges you the least or that makes you the most? And sometimes those are not the same, right? Anyways, I just wanted to bring this up, help make people aware. It fascinates me that we've got companies that are trading in millions and millions of dollars in losses. And like I said, I don't want to just pick on one company. That we could pick several companies, and some of them that we know really well. Is that who you should be investing in? Anyways, just a question for today. Hope this was valuable to you. It was fun for me to produce. Thanks, you guys.